Bitcoin is bouncing hard right now, and my indicators are flashing massive long signals across multiple time frames. After sweeping the important liquidity pool at $75,000, the main downside target was hit and the market reversed. My Telegram bot actually gave 3 separate long signals here, and all of them have already hit profit. The first half of this week looks incredibly strong for longs, and the entire market is geared for growth. But don't let this pump make you blind. While we are trading these long setups, there is a massive economic trap building in the background that will eventually drag everything down. I will show you exactly why a historic crash is coming at the end of this video, but first let's secure our profits with my exact targets for Bitcoin and the major altcoins. For Bitcoin, the movement upward is very confident. I believe the primary target is the price gap waiting at $78,600. We have a lot of liquidity sitting at that level, but there is even more liquidity waiting slightly higher at $79,600, where a 4-hour imbalance starts. Funding rates have cooled off, and some people are even trying to short the market right now. This means the market could easily squeeze higher on those shorts to hit our targets. If you want to open a short position, I would look at $79,600 with a final stop loss behind $80,600. Now let's look at the altcoins, because they are showing some of the most interesting movements right now. Hyperliquid is trading very confidently above $62. The weekly time frame closed with a massive green candle, and usually after a candle like this, the coin continues to grow. I actually took a hedge long position here against my short. We can use Fibonacci extensions to find targets since it is in price discovery. The first potential target is $71 and a more optimistic target is $102. Near protocol is also building a lot of hype and recently pumped. It closed with a massive green weekly candle and imbalance, so it looks ready to continue its growth. The next target for Near is between $3.80 and $4 too. You could try a small long here with a stop loss around $2.04. Solana, on the other hand, is not looking great. It failed to break the $81 level, and globally I expect it to go lower. If it bounces with the rest of the market, I do not see it going higher than $92. That is exactly where I would look to short with a stop loss just above $92. Chainlink gave us a nice local pump, but then dumped almost back to its base. It is bouncing now, but I would rather wait for it to cleanly break $8.90 before looking for longs. Ethereum had a lot of negative news recently and dropped down to $2,000, but it is bouncing back and basically swallowed that entire downward move. My indicator flashed a long signal, and the local target is to take out the levels around $2,160. XRP is also showing strength, and it broke the $1.34 level just like expected. You can try a careful long position targeting $1.40 with a stop loss at $1.33. Overall, almost all altcoins are geared for growth right now, so you should be working from the long side. Looking at traditional markets, gold is growing, but I missed my long entry. The growth target remains at 4,600 based on the Fibonacci levels, and silver is mirroring gold perfectly and could grow to the $83 resistance zone. The S&P 500 just broke its all-time high. When this index grows, it pulls the entire crypto market up with it. I'm just watching it right now, waiting for a peak to find a safe short entry. I'm already short on NVIDIA with a stop behind $228, and it is going exactly according to plan. Finally, the dollar index. It is falling, which is great news for the whole market and supports this continued growth. So the plan is simple. Trade the longs this week because the market looks great, but remember my ultimate downside target for Bitcoin on the daily time frame is still $73,000. And if we look at the weekly chart, the target is all the way down at 74,300. This local growth will end in a massive drop, and the global economy is showing us exactly why. Inflation in the United States just hit 3.8%. Every single time in the last 55 years that inflation crossed 4%, the stock market crashed violently. We are talking about historical drops between 25 and 57%. Right now, the top 10 stocks make up almost 40% of the S&P 500, which is a dangerous concentration. At the exact same time, regular everyday people are completely out of money. Credit card delinquencies just hit 13.1%, which is a 15-year high. The consumer is exhausted and the buffer is gone. Wall Street knows this and they are already packing their bags. We just saw nearly $2 billion leave spot Bitcoin ETFs. Big whales are moving massive amounts of Bitcoin to Binance to secure their profits. Stablecoin liquidity is vanishing, so there is no fresh money left to buy the dip. Yet retail traders are completely blind to this. They are trapped in leveraged long positions, paying massive funding rates, just hoping for higher prices. When the market finally turns, it is going to trigger a brutal chain reaction of forced liquidations. Enjoy the longs for now and take your profits at 78,600. But keep your stop losses tight because a massive correction is inevitable. Hit the like button, subscribe to the channel, and we continue tomorrow.